Good day, everyone. Well, as we all know, the market has continued to its uptrend since the recent lows of about 2 weeks ago. You can see it in all the major averages. Quantitative easing is firing on all cylinders across all the major central banks. And that said, the U.S. dollar is now testing 2-year lows as it approaches 78. With quantitative easing on full blast, commodities, including precious metals, may be putting in bottoms. You can see that gold and silver and the basket of commodities seems to be testing lows. So they might be rounding out, and wouldn't be surprising given the amount of money that's being printed. We also have a U.S. credit rating that was downgraded last year by Standard & Poor's, and they're potentially vulnerable to a second downgrade. And China holds, I think, the most U.S. treasuries, so they have a fiscal interest to reduce their exposure, and they do that by buying hard assets such as gold. And, well, anything that goes into hard assets, but gold is probably the most fungible, easiest to deal with, so they have been net buyers of gold for quite a number of years. Jill?
I think on the gold, I'm looking at this chart, and I'm looking at a weekly here along with the daily just above it, and it looks like we made a low, and you're having this sort of retest on the weekly chart, which you can also see in the daily chart. So it looks like the metals they bottomed, and then you have this retracement, which I guess is maybe it's 61%, some sort of Fibonacci type thing going on here, and then it retests. You don't get a lot of heavy selling off the lows, or as you come down into the lows, you get some support level here on this gap down, another supporting volume spike here on this gap down. So you get these couple of gap downs and they hold, they don't go anywhere. Now you're turning back up. So it's kind of a white coffee-in sort of retest on the metals, and maybe they have bottom, but I don't know if anybody's really aware of what happened last week, but Congress passed the Default Prevention Act of 2013. And the media is not making too much of that, but essentially what that does is it gives the president authority to raise the debt ceiling as he sees fit, unless Congress disapproves by a 2/3 majority vote. And I'm asking, what's up with that? Congress, according to the Constitution, Congress is the only one that can get the country into debt and approve the raising of debts, and now they've abdicated this responsibility, this constitutional responsibility, to the president. And so I think it just tells you kind of where we're headed. And so the whole QE thing, they're going to print, and the dollar, look at the UUP here, is making new lows. And so you wonder if we're on the verge of some sort of collapse in the dollar, or a more pronounced downtrend, because if you look at the daily chart here, you're starting to break down, or I'm sorry, the weekly chart, you're starting to break down through a number of support levels along this 2160 level on the chart. So you're starting to break support here as I see it, and you're rolling over again. And potentially the dollar, if we look at a longer term chart going back several years, it could be headed for this low below 21 on the UUP, which is the Power Shares DB. I think it stands for Deutsche Bank. Is that right, Dr. K? The DB? It does, right?
I believe so. Yes.
Yeah. Okay. Anyways, so I'm looking at the dollar making new lows, so gold should start to go higher. We're up today. Oops, that's got to have a space in there. We're up today, and you've had this big major pullback down on top of this little cup with handle type move. This is on a weekly chart, remember, so it's a lot bigger than it looks here. But you come down on top of this support level here. You're retracing. I'm going to say maybe 2/3, so 61%, some Fibonacci retracement of the prior uptrend from 2009 into 2011, and so maybe you're turning a bottom. But it seems to me that what's going on here is that the U.S. government is now on full print mode, and they're just going to keep raising the debt ceiling repeatedly. So somebody makes an interesting point here that the politicians have ignored the Constitution. I'm assuming that's what you mean when you say they. They have ignored the Constitution for 100 years. They equals the government. Yeah, politicians, basically. And I think you're absolutely right. Starting with the Fed, which is not only the Treasury, I believe, has the right to mint money, and now they've given the Fed the ability to do that continuously. And so that's what you got going on right now. And so it seems like this is probably bullish for the metals, and would you say in general commodities too?
Yeah, I would say in general, though, I think gold is quite well recognized as a storehouse of value. So as currencies depreciate, gold is the first safe haven, and certainly the Chinese have a vested interest in reducing their exposure to U.S. Treasuries. So they, of course, exude a formidable force of buying on the precious metal and, of course, other assets, as they, they've got I don't know how many trillions, but they're certainly the strongest creditor nation out there in terms of just sheer buying power. I'd also like to say, interestingly and unfortunately, with the passage of the Patriot Act many years ago, as a reaction toward 9/11, the Bill of Rights was essentially obliterated with the passage of that act. And of course, we had the Patriot Act 2 that was passed, and we had the Rave Act that was passed, and all of these things. Essentially, what they do is they take apart the Constitution, and they pretty much run roughshod over it. And it's unfortunate, but historically speaking, countries that were once great and once had fiat currencies often cease to have fiat currencies, usually within a span of 50 to 120 years, if you go back over the last several hundred years.
Anyways, all of that speaks possibly. Yeah, the one thing I notice here is the commodity index is down on the week, and it's gapped down over the last couple of days. What do you make of that?
Well, there's not a super tight correlation between on a week to week basis on this stuff, because there's lots of cross currents. So I wouldn't try to minutia read too much into little wiggles and things. I would say if we see a more pronounced trend of the Commodity Research Bureau, say, undercutting recent lows of about 275, that would be a concern, because on a technical basis, that means it's possible that the downtrend is still intact.
Okay, so but definitely the precious metals and the dollar are definitely responding to this new mentality of all the money that's fit to print. So anyway, so what does this have to do with the market? On an index basis, we're still on a buy signal, and the indexes are acting okay. If you look at this, the NASDAQ, just pulling in, that's a very sharp move up, so I guess it deserves, a little time to rest and pull in a bit. Same thing with the S&P 500, which you see right here. So, you could go sideways here for a little bit. What's interesting is that in the process, and we were discussing this earlier this morning, is that there is a certain sort of bifurcation in the market. You're seeing some stocks getting hit, some stocks are acting very well. Sometimes the erratic in individual stocks is V-shaped, and or the movement rather in individual stocks is erratic and V-shaped. So, for instance, you see this YY, breaking down 15% and shooting right back to new highs, and then pulling right back in on heavy volume. And so if you're on the wrong side of that trade, on the wrong day, you're going to be feeling some pain. We also have seen Netflix come apart, and this is probably the ugliest reversal I've seen in my career. Dr. K, can you remember or recall ever seeing a reversal as bad as this thing?
Well, in the late 90s, you got some pretty crazy, stocks that went up fivefold,
Right.
sixfold. But in this decade, I would say these are pretty rare patterns, just simply because a lot of stocks don't, haven't been these model book type quality names. And of course, that did come after an earnings report, or on the day of the earnings report. So it really, the volume's going to be huge just because of that. And I would say, in a way, it's a more powerful reversal if it happened. It just happened on a technical basis, like there were big sellers in the stock, and not because of any particular news event. But nevertheless, it's bearish.
Now, it seems like it's holding this pocket pivot here, so I'm wondering, is this thing going to turn around and go back up? I'd have to say in this...
But, because it's just a big volume day because of the earnings.
Right.
So it's artificially inflated a bit.
So, if you think it could hold support in here and turn and go higher, that's something I've been thinking about.
Actually, I wouldn't be surprised. But that said, it's still, it's interesting because these when you have these high volume reversals on no news, but they're a technical reaction to the stock having gone too far too fast. Usually, the next day it falls even further. It doesn't. This is kind of a weak rally it's having. It might retest the 50-day, and then I wouldn't be surprised it gets traction and starts to go higher because I guess the fundamentals seem to still be quite intact. I mean, on a valuation basis, this thing is at all-time new highs, and the earnings are still severely lagging what they were in its prior run-up. I mean, you can make the case that valuation basis, it's way overvalued, but of course we know that things can go even more overvalued. It's a matter of market perception. But I'd still, stock to me carries a lot more risk up here.
Yeah, I guess from a practical standpoint, if someone owns it, there are some pocket pivots in here, breakouts here, gap up here, I guess a pocket pivot here. If you still own it and you sat through this breakdown through the 50-day moving average, which is pretty ugly, you're still actually up on every buy point in the pattern so far, which is interesting. So it may not be the end of the world for Netflix yet, but that is a very ugly reversal. The thing is, I think a lot of people will see this and get very bearish, and in the short term, a bunch of people might try and short the stock. I think that can be a fool's game as well, because you don't really have a breakdown in the stock in terms of it even breaking down through the 10-day moving average, which you can see on the daily chart. So to think it's a short here and you're going to come after it and score and make a bunch of money, I think you're asking for trouble. And what might happen in the short term because of this extremely bearish action is a lot of people come in and get short, and then that creates a near-term floor in the stock, and it doesn't break down. Instead, what it does is it squeezes a bunch of shorts and has a rally back up. So anyways, some questions people asking about. Let's see. Let's start with, we'll start at the beginning here. Organovo, which is continuing to move higher. We caught the pocket pivot right there, and the stock has moved higher. This is extremely speculative, but that's a pretty nice move. Maybe it's getting itself going. You look at the weekly chart, and you can see some churning here. You stall out last week because there's some overhead here. Nobody really wants to believe this thing anyways, but it's starting to break out. So, a very speculative $7 stock. We caught the pocket pivot there, then a Bible gap up here. And I would say on these Bible gap ups, some fail, like Netflix failed. You had Cepheid, CPHD fail last week. I think New Skin was another one that had a Bible gap up and then came all the way in. Sometimes what you're better off doing, especially in this environment, is just let that gap up day play out. And then sit around and wait to see if it forms a tight flag. You notice NUS is doing that. You notice also on Organovo, I hope I'm pronouncing that right. It had this Bible gap. It closed at the lows, but held that low, and then was able to come up and out. So you might have been better off buying it the second day once you are able to discern the actual low on the gap up day, instead of trying to buy into them, and the next thing you know, you're down 4 or 5% because the thing's just continuing to come in, similar to what NUS did. So that's just one approach. I noticed another one holding up like that today is VF Corp, which had a Bible gap up, holding in tight, and may continue to do that for a while. Some others that are gapping up, Nxpi Semiconductor, so I think that probably a Bible gap up this morning. Notice how this would have been hard to sit through if you owned the stock prior to earnings, because you had a huge volume break yesterday, and then the stock shakes out and blasts off to the upside, which is pretty constructive, I think. These are some examples of stocks acting well. You look at Netflix getting hit. I noticed, some of these, the YY, the Yelp, coming in and getting V-shaped, and this sort of stuff's getting hit, and these are leading stocks starting to get volatile. So there's a certain amount of instability here as we go into earnings. We saw Cree, and Dr. K, you definitely won that bet last week on where Cree was going. But you know what? Here's how I look at it. We like to bet on stuff all the time. And, we do have the annual bet on the big game between Berkeley and Stanford. And we do bet $1 at a time because we are...
Yeah, $1's not worth what it used to be. I think we should increase it to $2.
Yeah, maybe so. We might have to. So, but I think on the balance sheet overall, in terms of our bets on stocks and the big game and whatever else we bet on, we've also been betting on tops for the last 4 years, and I keep losing on those. But I think we're about even on the balance sheet. So someday we'll actually have to exchange the few dollars one way or the other that one of us is ahead. In any case, you got me on that one. I have to admit, and I think this is very interesting because lightning has struck twice here. And I'm actually short Cree at the 50-day on this breakdown. I'm thinking this could be a big pod, and it's just going to keep heading down for at least a 200-day moving average down around 57.78, which would undercut these lows. So I think that one is shortable. Another one I was shorting this morning, and I did cover it underneath 85, right around there, was F5. They jack it up into here. I listened to their call. I don't see what's the big deal. 12% earnings growth. So I figured I could hit it and use the high of 2 days ago as a stop, and it just barely missed it and reversed, and you got a big outside reversal day, but you can also see now that the stock has undercut these lows here, so it's a logical place for me to cover it and then see where we go from here. But that was a nice quick score, and I just find that if I don't try to get too hung up on whether what the market trend is, it's pretty obvious the market trend is up, and there's nothing in the action that would tell you otherwise as far as the indexes go. But on a stock by stock basis, there's a lot of stuff going on, and today a couple of my favorite stocks are getting smacked pretty good. You've got Finisar. I'm not sure what's going on. If anybody knows the news here, all I know is once this starts to break down, and on the breakout, I'm gone. I'm not even going to mess with that. Ciena's another one. Same thing, breaking the support here, and this thing just came down very quickly. Fortunately for me, there were tiny positions, 10%, so not anything major. And if I can go in heavy on a short to hedge at the outset of the day, with saying F5, or even hitting Cree this morning. I think LinkedIn is also another stock. You can kind of hedge your longs if you're able to approach the market as a market of stocks and not necessarily as a stock market. And it seems to help in the volatility because it's pretty crazy. You see things swooshing all over the place. I think Yelp on an intraday basis gets my award as the most volatile intraday stock. If anybody has another one, let me know. But that's kind of the situation here. So even with the indexes up strongly today, right now you're up 80 on the Dow, 18 on the Nasdaq, and 457 on the S&P. It's not altogether even action out there. So it is tough, but there are some stocks acting pretty well. We looked at the Nxpi as a viable gap up. Generac is another gap up. But again, I'll watch these on the first day and then see where they go and maybe come in on in the next couple of days. You could have actually done that with Solar City. Here you had the viable gap up, and it took a couple of days, hang out, holds the top of the middle part of the W in the double bottom, holds that peak right there roughly. And I think I was on the chat room on this day or something in here saying if it came down to near 45, I think you'd load the boat on Solar City, and it has launched, and it's holding up there going into earnings. So I mean, my view here is take the profit. I don't care if it goes higher. That's a 40% gain and almost nothing, and that's insane. So I'll take it at least partially, I think, going into earnings, especially on this little V-shaped rally. That's my view. I mean, I could be wrong. It could go higher. But in this market, that kind of a gain is very rare, and when it does happen, a lot of stuff isn't sustained. I mean, a lot of people might have thought, oh, here goes Netflix, coming out of this uptrend channel, it's just going to launch and then smash. It's reversed. And so I think, be safe and be sane. That's just my view.
It's not the 90s.
What's that, Dr. K?
It's not the 90s.
No, it's not the 90s. Things don't start running up and then they don't stop. So Centaurus, I think we talked about this last week. We had a bottom fishing pocket pivot here. Stock's moving higher. This is a situation that I think is easy to play because it's coming up and around. Things that are already extended are precisely that. So I think you have to be it's sort of opportunistic and kind of thinking in terms of what might start to turn. We've seen a lot of stocks do that and come up off the bases, and we might, what you might have here, and what I've been looking for is if you're seeing some of these leaders falter, you know, LinkedIn, Netflix, Tesla, which it's trying to rally today. It's undercut this low here, so I don't know, is it trying to set up in a double bottom? Now you got resistance at the 50-day. You know, somebody's getting hit, so maybe they take a rest for a while and something else moves to the fore and assumes the leadership role. That's something I'd be looking for. Doesn't necessarily mean it has to happen, but that's what I'd be looking for. And I think, you know, as far as the big stocks go, Google, viable gap up here, doesn't, you know, a couple of days, again, you could have waited for it. You got a 974 low here. You pull back for a couple of days. You could have bought it in here. Seems to be holding, volume drying up, and then boom, you're back out to all-time highs. So, you know, you see that happening. Amazon comes out with earnings today, but again, here's a viable gap up. I think the news, I was thinking it was because of a sympathy move with Google, but they also said something about they're hiring 700,000 new employees for the holiday season, which I guess is good. So, anyways, getting back to the questions, I think I went off on my diatribe on Organovi. I mean, it's up there, so I don't know why anybody asked us about this, because we already told you there's a pocket pivot right there. That's a buy point. Stock's gone up, you know, 10, 15, I don't know, 20%, I guess, from there. And it's just coming out of a base, you know, so you got to decide what to do. We're not going to sit here and tell you, oh, you know, sell it, because kind of cheap, just barely breaking out. So you're going to have to figure out how you want to handle that yourself. Anyways, look at Centaurus, Nxpi, Generac. Another viable gap up. Cephade, you know, this is a viable gap up that didn't pan out in the morning. It came all the way back in. And, you know, let's face it, if you're buying it in here, say 40, 50, for example, on the viable gap up day, because it shot up there right away, you pull all the way down in here to a low of 38.55, and you're getting hit pretty good. So, you know, that's I think it's a little bit of a flaky stock myself, but you know, you're seeing that. But that's why it's best, I think, to hang out and wait. You can see the stock coming down the next couple 3 days and pushing you right out. Anyways. Somebody's asking us, how do we find stocks like ONVO that are low price with no earnings and sales? Just running a volume screen on it in the middle of the day and looking at what stocks are up on heavy volume on the day and basically picking that up. But I think we've been watching that one for a while. That one's, Dr. How do you pick that up? It's this basic volume screen on the day, correct?
Yeah, exactly. I mean, I run a price screen, so I don't have to look at cheap stocks. But then I also run a screen that's just to pick up stuff like this. It's rare, but it's worth running that screen because you're only going to pick out a few names anyway. Or I think the screen when I picked this one up, I think this was basically the only one on the list. So it's a very small screen. It doesn't take long to run.
Yeah, and my approach is I just run a volume screen. I look at everything that's moving on volume that day. I don't really care about the price in general. I don't know if I have a minimum price of like $5 because I notice you will get some stocks at $6, $7, $8 start to move. Look at Taser at $9. That thing got going and is hanging in there pretty decently on this pullback, and here volume drawing up. So earnings are next week, so you have to see what happens there. Let's see some more.
Yeah, and sometimes it's just from reading. You know, just some of these names. You know, you read a very interesting technology. It's traded on the Nasdaq. I'm going to check them out, and you know, most of the time they're a little bit too cheap, especially if it's a name that I haven't heard of. But you know, once in a while, you get something that is that's worth watching at least, and this one's certainly been worth watching and playing. I mean, we've traded it recently, but this is the first time I've actually taken a shot with this one because it's pretty much attempting to prove itself on a technical basis.
Yeah, and it's worked out so far. So nothing spectacular. For all you know, this is just the beginning of the move. You're coming out of a big stock came public down here. You're coming out of this big cup of candle. So for all you know, this is just the very beginning of a potential price move. Let's see here. What time is it? 8:28. Gil, does Tesla look a lot like a lot of the ugly duckling charts that you've been pointing out that break down only traverse to new highs? Is this becoming a trade the traders type market? Well, I can't tell you whether Tesla is. It looks pretty ugly right now, but does that mean you're going to buy it on that basis? No, I think you'd have to wait for some kind of a buy signal to materialize rather than just assuming you're going to buy this pattern. So I suppose if you did, 160 here would be your quick stop. So I guess that's about 6% from here. Not like it's a real tight stop, but I notice, that's an observation more than anything, is that I notice you have these ugly duckling patterns that turn around and go higher, and that's kind of how this market has been. And so you have to be alert to things that are making turns, and that's why a lot of these bottom fishing pocket pivots have looked decent, because it's basically corollary to the ugly duckling theory, which is that things will get real ugly before they turn around. Anyways, let's see. More questions. Tesla we looked at. UA Bible on the dip today. Hey, Dr. K, is UA Bible on the dip here? Yeah, we're expert bottom fishers. Heavy volume, gap down. Oh, I'm just all over it. I just sell your house, sell your kids, put all your money in UA right here, right now. What's that?
If you owned any, you should be selling right at the open. And I certainly, this is a classic case of something you don't want to touch because it's gap down on earnings. So, and gap downs, you just generally want to give the stock enough space, meaning you want to see the stock trade for a number of months after it's had a gap down before you'll revisit it. And this is based on decades of studies I've done on gap downs, which is why the other shoe can often drop. It doesn't necessarily have to happen that way, but your risk in getting involved in a stock that's gapped down, even buying a few weeks later, can be treacherous. I would have to see a material change in, say, let's take this one. I would have to see a material change in this company, some major news event, followed by a gap up, something to reverse this gap down that it's had.
Okay. Let's see, more questions. SILC Bible gap up. This a Bible gap? What is this company? It doesn't hit any of my radar screen.
Silicon.
Oh, this stock trades 41,000 shares a day, so it doesn't.
It's a micro.
Yeah, I don't play here. So is it a Bible gap up? I guess you could say that was, and you could play it, but not a stock we would be interested in because it's just way too thin. That's you and like 5 other guys buying it. Valiant Pharmaceuticals is just holding up off the 10-day moving average, so it's just holding up in an uptrend. Nothing really, meaningful there. Facebook, it just holds the top of this flag breakout and the 10-day moving average, which is constructive. Somebody came out this morning and put a $68 target, I think it was, on the stock, which I believe in. Nothing like being early on the stock, but it's had a pretty good move. So it looks to me like it needs to form some kind of base in here. So going into earnings, which are next week, I think you gotta just hang out. I mean, it's not really breaking down. So, anyways. I'm in the middle of doing something right now. Some alerts getting hit for me. So. Anyways, let's see. More questions. You see oil going lower or ready to bounce? Somebody asks. I don't really know. I don't. It's in a downtrend, gap down, and sitting on top of support. So I don't know. If you want to use chart reading 101, I suppose you can. Decide that the stock is, or the commodity rather, the ETF is ready to bounce and come up off of here. So anyways, I can tell you. All I know is you got a gap down. This is support. That doesn't mean it's going to turn and go higher. It's interesting that while the metals are moving higher on this, all the money that's fit to print legislation we had last week, you're not seeing the commodities do it. And so, it's interesting, like oil has gapped down. What is this telling us? Is this some sharp drop in demand or something, or increased fracking? It's really hard to say. So anyways, I really can't tell you. Dr. K, why no?
The whole pattern is pretty sloppy. So when it's sloppy like this, it's pretty unpredictable, and it's your time is better off, better served looking for the low-hanging fruit. This is not one of them. Maybe someday this will set up. The pattern will set up, and it'll give you a buy point, and that would probably also be prefaced with other actual oil stocks that are setting up in a constructive way. But this group is very tough, and it's very rare to see that kind of confluence among oil stocks. I mean, I remember 1997 was a great year for oil stocks. They all set up and went, but that kind of action in the oils just seems to be once in a decade.
Yeah, and you've seen a bunch of oil stocks get smacked lately. I think this one, what was that? Carrizo Oil. I'm trying to remember. Somebody let me know. But anyways, some questions for you, Dr. K. Why no pocket pivot reports on Jazz yesterday? I don't really see a pocket pivot on Jazz.
Yeah, if you remember also this one.
There's no pocket pivot in here. So what are they seeing?
Yeah, they're wrong about that. There is no pocket pivot, but also even if there was, this is the stock that tends to be have squirrely market makers. It tends to have these very wide range days once in a while, and so that increases the overall risk for the stock. Because if you're sitting in it and that sort of wild trading day happens, you'll probably get forced out of your position. And it did have that just recently. It had a lower half close on the 8th of October on volume. That. The pattern is not a good pattern.
No, and it's not a pocket pivot. So VRX, why no pocket pivot yesterday on VRX? Let's see, 1, 2, 3, 4, 5. Yeah, well, that's a pocket pivot there, but stock's kind of extended here. I don't know. What's your take on that?
Yeah, it's a very minor pocket pivot. I mean, it's certainly, this is a stock that we've talked about before. So if you bought it then and you're pyramiding this thing, because you certainly, you could have bought this last year or earlier this year. There have been a number of buy points, and it's never violated its 50-day. It always gets traction when it comes to its 50-day. So if you wanted to, there'd be nothing wrong with adding to your position yesterday. And if you hadn't bought it at all, but you were tracking it, and it does that, there's nothing wrong with taking a small position here. I mean, it's not extended, and this uptrend, could very well continue. It's approaching super cap territory. It's a $40 billion company, but it trades the technicals are very clean, and because of the clean technicals, your risk levels, what your risk levels are. You're probably going to use the 50-day. If it even penetrates the 50-day, I would probably be selling it, because it just really hasn't. I mean, the worst day was on May 24th, where it undercut by 1 point or something. So you could use that as your barometer. So basically, your risk at this level is 10%.
Yandex is, let's see, good test of the 50-day. What's your take on that, Dr. K? I think it's just a V-shaped breakout and smack, coming back in. So I don't know. Good test. What would be a good test of the 50-day? I guess if it closed up off the 50-day, but it's not. I think you're talking about. It's above the 10-week, and it's well above the 50-day, so not sure what you're talking about as far as the test.
On an earnings report. So again, unless it can reverse this this negative action today, I wouldn't touch it.
Yeah, and I don't, and I don't even know what you're talking about. Do a test of the 50-day. You're talking about this one here. It has had several tests of the 10-day, so I don't know if this is necessarily a good test or not. It's very V-shaped breakout to new high. So, it's a tough one. If you bought it off the 50-day and you're still up on it, I guess you could sit with it. But hard to say, whether this is constructive action. I think it's very volatile. YY, same sort of thing, very volatile. Do you buy it on the weakness? If you had, I guess you would be getting away with that. So, you could say so. Wango Tango. Yeah, baby. V-shaped move, so not much there. You could say this is pocket pivot support, or its first pullback to the 10-week line, which it bounced off of, but it's V-shaped, so if you own it, it's a hold, I think. OCN, Aquin Financial, pullback to the 10-week line. It holds the line following this breakout. I don't know if you call this the first pullback to the 50-day line once it gets going, or the 10-week, and pulls back here and moving to new highs. So it's acting okay. Biogen into earnings on Monday. Dr. K, are you going to buy Biogen into earnings for Monday?
Well, there's always more risk buying into earnings or holding through earnings. And, this company, it's certainly leadership characteristics. But, again, there's no reason to be buying ahead of earnings or the day before. I wouldn't recommend it unless you get a perfect pocket pivot or a perfect buy point. Then, I certainly might take a small position the day before earnings, but it all has to be set up very nicely like that.
Right. And even if you like I really did think that Cree was going to have a good earnings announcement. It had a possibility or a chance of gapping higher, and instead, what it does, like I said, lightning strikes twice. So, regardless of what you think, what your opinion might be, I don't think it's a good idea to buy stocks going into earnings these days, unless you already have a previous cushion in the stocks. I just don't think it's that prudent. I think it's you're gambling, basically. It's earnings roulette. Let's see, Align. Here's this example of a stock that had a buyable gap up. It's trying to form a flag, but now you're 4 days afterwards and it's not moving. So, like I said, I would be looking to buy these on volume drops. Maybe this is it, and you could use the low of this day as your quick stop, 56.10. But other than that, you have a buyable gap up type move, and the stock just drifting sideways, not really taking off. So, ISIS Pharmaceuticals. I like the name. I think this is one of those no earnings situations. Stock's pretty volatile, so no pocket pivots anywhere. You did have to support off the 50-day line here, and that's about it. Other than that, I'm not going to buy into this strength. Do you have any thoughts on that company, Dr. K? Have you been following it all, or?
A little bit. It's like you said, it's volatile, and it tends. It recently violated the 50-day. Prior to that, it's just it's biotech. It's got a bit more risk there. So it's something it's something that I certainly think is playable maybe in the future. It's got a lot of price momentum, but it has more risk and it does trade a bit sloppy. And there's no earnings anywhere in the foreseeable future, but it is a biotech, so that can be forgiven. I just would like to see better technicals out of this stock.
Thoughts on Medco? I don't have any real thoughts. A lot of red volume in the pattern. It's just a big,
sloppy,
big, ugly,
very sloppy base.
Stock coming out of a big ugly base. So trades what, 800 and some thousand shares a day. So it's not even that big of a big cap, but it's trying to come out of the base. I guess if you like it, you could buy it and use the top of this breakout area, I guess, as a stop. But it doesn't really get me excited. ALNI has similar science to ISIS, somebody says. So there's another stock. Similar pattern, actually. But again, I think these are high-risk biotechs with no earnings. So, you're playing that sort of thing. I mean, ACAD was like that. It's coming up today. And that's no earnings biotech, and then it runs up and it blows apart. So, you ask us what we think. I'm not in the mood to buy a lot of these. Very few. I prefer to stick to the ones that have earnings. Regeneron, Celgene, Biogen. We've seen several others. Even Santaris looks decent to me on this little pullback. After the pocket pivot and turning around, these things have earnings, so they're a little easier to gauge. And so unless you know the science really well, there's a lot of risk. And even then, if you think you know the science, anything can happen. Noodles is just hanging out. There's nothing going on there. I don't like the fact that every time it comes in, you see selling volumes pick up. It probably needs to dry up for a period of time and hang out Because in the meantime, it seems like this thing's just not going anywhere. It's pretty wide and loose. You don't really care for that, do you, Dr. K?
Not so interesting.
Celgex, or CoreLogix, rather. Let's see. I was thinking of Celdex. That's it. Anyways, CoreLogic, a breakout on a 7% earnings increase. Not decelerating earnings, not my cup of tea. So, Illumina. Well, we talked about the viable gap up here. You could have waited one day to buy it once it has established a low on the gap up day, and now it's moved up. So what else is there to think? Pull back to the 20-day moving average in Pandora. Yeah, I mean, this is volatile too, and this is a weekly chart, so it's zoop all over the place. I don't know what to say about this stock. If you like it and you own it, say on the basis of this viable gap up, then I suppose you're okay, But I don't really see any reason or any buy signals in the stock, or really any constructive tight action. I mean, Dr. K, what would your interpretation be here? Your thoughts, as it were.
Yeah, it's. I mean, I've seen this one. It had that gap up. It's held that gap up. It's choppy. The fundamentals look. They're not impressive enough to get me all that interested in this name.
Right.
You got earnings that are just red and slightly black, and then it doesn't have the characteristics of a true leader just yet.
Right. It doesn't thrill you. It doesn't have that thrill factor. I don't know.
Yeah, there's better out there.
And it's not consistent. iSearch in a downtrend. Yeah, I mean, it's been a downtrend forever. So. That's what it looks like now. Bear flag, short it and go and try to play this short. I guess if you did, the 50-day would be your stop if you wanted to. SWI downtrend. Well, it's in a downtrend, but it's already down, so I'm not shorting it here. I don't, it's at the 50-day. I guess if you think it's going to roll over again, you can go after it. But by this point, the thing's starting to round out. The chance that it's going to blow apart, I think, is far less than going after something more current. Somebody says, by my count, BRX did not make a pocket pivot yesterday. Let's see. 1, 2, 3, 4, 5. No, it did not. You're right. So there's no pocket pivot. Anyways. I guess that means the person asking the question about VRX and Jazz should probably go review what a pocket pivot is. Aren't V-shaped rebounds to new highs, especially on lighter up volume, a bad sign for a stock, or has this QE market changed this rule? Well, I think you're seeing why they're dangerous to buy into, because you get whipped the other way. So YY breaks out and gets whipped the other way. Yelp breaks out and gets whipped the other way. Even LinkedIn,
you know what? VRX does make the pocket pivot, but just barely, just by one day.
Barely? Okay, just by a day. So I guess I'm wrong.
The day count has to be. Generally, when you're looking at these charts, it's good to have a grid overlaid behind it so that you can just quickly go 5, 10, and then you're not going to miscount.
Right. I actually do have that. So.
Yeah. No, I'm just saying to everyone out there. And even then, I suppose it's easy to get tripped up.
High growth stock investor, HGS Investor Software has a template that you can overlay on your charts that puts blue lines, these big blue bars, down along your pocket pivot. So, in fact, let me see if I can pull it up real quick. There we go. So you can see on HGSI that they put these blue bands where there are pocket pivots. So yesterday did qualify. So that's one easy way to look at it. So they actually have a whole Morales and Catcher trade like an Anil Disciple strategy thing, different screens, and also chart views. So they appreciate what we do, I think. And somebody asked a question. It says they were at a IBD meetup, and somebody there was pitching the new IBD ETF market timing system using ETFs and the market calls. And you know, I think that's they're also acknowledging or trying to acknowledge the market direction model as something that might be viable. I think they're probably going to have some trouble with that, similar to what we've had with the market direction model. So, but you know, like they say, imitation is the best form of flattery. In any case, just thought I'd bring up that HCS Investor software and what they have in terms of helping you identify pocket pivots. I do think it needs a few tweaks, though, to get it a little more refined and a little more precise. There are some action that it misses, I think, on occasion. Anyways, where are we? ARM-H, another example of a good chart to buy into earnings, and it got hammered with mixed earnings. Yeah, definitely. And again, you know, that just points out the whole earnings roulette thing, which is what this market has really been all about. You know, roll the dice. So it's you're better off not, unless you have a big profit, say on something like this. It's better off not to play and just let the earnings come out and then see what happens. You know. GNRC, Generac, we already talked about the Bible gap up in Generac. So, you know, again, you could wait and see how this settles in, but, you know, the chart looks okay. I don't know about the earnings. What are they looking like? Up 30s? Yeah, they're decent. These guys make generators, so I guess when society melts down, the dollar devalues to nothing, and society melts down, everybody's going to need a generator. Maybe after recent events, that's becoming more obvious. Data, Tableau software, well, just a cheap, thin stock I don't play because it trades a couple 100,000 shares a day, and that's just junk to me, so no reason to even play it to start with, in my view. Silica, great call. What about now? Well, my view has been, you know, on the move up, you're up 30% or something in here, and you take the profit. That's something I've talked about endlessly. And yeah, sometimes it go up a little higher, but I found in this market, when you have that kind of a profit, like I'm talking about with Solar City, you don't look a gift horse in the mouth. You take some off the table, because in this market, you have seen, you know, stuff can evaporate very quickly, as we saw with ACAT. So that's just my view. You know, great call. What now? I think that depends on what your parameters are for the trade. What were your objectives? I think, like I said, if you get a 20-30% profit in a stock, you take some off the table. But as far as the stock being done, maybe it's just a pullback. I think they announced earnings over the next few days. They didn't announce earnings today, did they? I don't think so. No, I haven't seen an alert on that. I think it's in the next week, it looks like. So, you know, it's pulling back after a run-up. And somebody asked me, what are these little black pyramids? They're actually triangles. They're too small to be pyramids, unless they're miniature pyramids. But I kind of like the thought. In any case, what these show up, these are what I call ants. They're triangular ants. They come from the same universe that Dr. K is from, which is Galaxy. What is that again, Dr. K? 125 or 124? Yeah, where ants are actually triangular and they have no legs. In any case, it confuses their predators because they can't tell which end is the business end and which end is their head. In any case, these show up on my charts on this particular layout when a stock is up 15. Oh wait, what is it? 12 out of 15 days in a row or better. Yes. So you can see this in Silica. It's really exciting to see. In the old days, you used to see this was power, and so a pullback and then a breakout back to new highs, you would just buy it because of the fact that this is just a tremendously powerful formation. I think we've seen it, you know, in Facebook. You had them here, and then you turn around and you buy this. Again here, you see them here, so it pulls back and it breaks out again. That's the way we used to use them, and sometimes they work, but again, I think, you know, pocket pivots, where here's a pocket pivot here, which coincided with what I call an ants breakout, and you know, something exciting for you to learn about now. I should have made sure I took this off my chart, so now I'm going to get a million questions about this, and people are going to want to put it on their charts. but I'm not giving it away. I'm charging for it. So, anyways. Show jabs on HGI. Okay, I'll do that. It looks like it's showing one on Jazz for yesterday, Dr. K. So
It's yeah.
So, but again, that's not a pocket pivot because it's extended from any of the moving averages, and you're not really breaking out of this range either. So it's not a pocket pivot. VRX was. So anyway, I guess I have to keep that up for a while, huh? Nxpi, we already talked about Nxpi, so you know that's a buyable gap up. If you want to buy it, I guess you can. Course, there's nothing going on there. There's no buy points. You're going into earnings, I think, in November. Dr. K, is the radiation at Fukushima a problem?
Well, it hasn't been. I mean, in terms of, are you talking about in terms of the Japanese stock market? Like I said back then, you know, the markets, the Nikkei will right itself, and this is just a short-term crisis. And these crises generally don't have any long-term implications for stocks in the respective country.
Yeah, I guess somebody must think you Skype with your relatives in Japan all the time and find out what's going on there. But
yeah, I mean, in terms of health consequences, yeah, at ground zero there were some issues. My relatives are fine; they weren't at ground zero, but you know, obviously, it was psychologically it was more damaging than anything to people who were connected to that.
Let's see. Any other questions? I think we've got all our questions for today. Let's see. I'm going to check and make sure I. Oh, no. FSLR. Well, you know, Fizzler had a bottom fishing pocket pivot here, and then I think has just continued to move higher. There's some sort of activist buyer or hedge fund in the stock, and that's what got this thing going. So, you know, the solars have been acting pretty well, though. I mean, the whole group has been on fire. At CSIQ, SunPower, JKS Solar, Jayco Solar, some of the other ones, let's see, TSL, Trina Solar. So the whole group's been acting well, so I guess it was just a matter of time before First Solar gets going as well. So, but all these are getting sort of extended here. But going into earnings, you know, again, somebody's, any thoughts, guys? Like what we're going to tell you? Oh, just, yeah, go ahead and buy it and hold it, and you know, hold it to earnings because it's guaranteed to go higher. You have no idea. Nobody can tell you. And I think sometimes a company can even have a good report and the thing goes the other way, it goes south. So asking us is like, might as well be talking to the wall because it knows probably as much. So somebody says it looks like ants are a sell signal. Only a short-term sell signal, but the point I was making, if you recall, is when you see these ants, the stock has a pullback and then breaks out again, you buy the breakout. That was the old rule. So same thing here. You know, you get the ants, you have a pullback, you buy again on the breakout. So they don't always indicate a pullback because you can see two ants right here, two ants right here. After these two ants in real time, the stock goes higher. So they wouldn't have told you anything in terms of a top. So your observation is incorrect. No soup for you. Anyways, let's see. What else we got going on here? Any ETF suggestions for Q4 and into 2014? No, I don't have any. Do you, Dr. K?
No, to predict, make predictions like that doesn't. There's too many variables that'll happen between now and then. So, no point in
the
making.
only one I would say is I think gold you might see the precious metals start to have a move. I mean, we'd like to see a more concrete buy signal, but like we were talking about at the beginning of the webinar, you are starting to see some turn in gold. So, anyways. Let's see, some of my favorite stocks. I have liked this blocks. You know, it's acting okay, pulling into the 10-day. I think 5 is interesting. It's very erratic, but I like this as a coherent pullback, a little bit of a dry out. Santaris is another one. We talked about this last week, I believe. And keep an eye on it. I think I went through the whole base last week on the weekly chart, so week by week, and it looked constructive to me. So I think someone found that valuable. I don't know if you bought it. I mean, you don't really have to. They're going into earnings, I think, next week. No, I take that back. I think it's on November 17th, allegedly. But, you know, that's acting okay. Does HCSI show pocket pivots for every stock in the database? I believe so. Does today's action on the NAS, heavier volume than yesterday, look like stalling again? Is there a percent advance to look for? There's no real percent advance to look for. The stalling, you had stalling on Tuesday because you closed roughly mid-range on heavier volume. That would have been here. So let me. So that would have been on this day here. You get stalling. This isn't stalling because you're near the peak of the range. If it were to close down towards the lower part of the range and the volume is higher today, I don't think volume is higher today though. Is it, Dr. K?
No, I would have to. 1 second, let me check.
Volume is slightly up on the NASDAQ. Well, it's up 5.89%. So if things did roll back in, then yeah, it would be churning again today. But you're basically looking for this heavier volume, and the stock closing mid-range. That's why in this particular situation here, I have the opening bar. You can just barely see it right there 3 days ago. So you can see it open there, and then it closed there just below. And that was a churning day. So and it'll color code red, so it tells me this is also a churning day, but volume is lower. So I got to put that together. But still a little bit of churning at the top. But again, the market's run up. That's a very sharp V-shaped run up. So when you see it in stocks, you usually see a very sharp pullback, and we've seen that in a number of stocks, such as the YY, Yelp, even LinkedIn was a V-shaped move that yanks back in. And so you would expect to see the market yank in. The question is whether you're going to yank in more, and you could get a decent correction / pullback, whatever, from here. That's a possibility. And with some leaders looking a little bit dicey, such as Tesla, such as LinkedIn, such as Netflix, there's a possibility. So, anyways. Lulu. Oh, here's one for you. Lulu, it's just hanging along the 50-day. So I think to re-short it, you could say that once it had broken down in here, you could short it again because it had broken, through this the top of this range, but it was able to rally back in. So that's a possibility there if you were alert to that. Now you're just looking for a breakdown through the 50-day. So I'm not really sure if I would buy the stock. It doesn't look all that constructive. This pattern doesn't. So it could become a short again. Dr. K. Juan warned about distribution days just after a follow-through day. We've had 2 in 5 days. Is that an old wives' tale, or is there data to support it?
When you have distribution days after what?
A follow-through day. I guess we had, you're looking at the S&P, I guess your follow-through day was, let me see, this day, I guess? Or was it this day? I don't know, one of these days, and then right afterwards you get a stalling day and a distribution day. Is that trouble?
Yeah, I mean, statistically, it's not good to see a stalling day or distribution day the day after, or usually within 2 days of the follow-through day. It means the follow-through day is much more likely to fail. But that said, this is a QE environment, so a lot of these old rules apply to former markets and not in the current environment we're in.
Right. NQ, back to the 20-day moving average. It looks like it is, but you don't know. I mean, this, again, a V-shaped move to new highs, pulling back. Could find support here. I had some of this and bought it off the 20 level here, and I sold it. So, I think it needs to set up a little better from here. What about Baby? What is Baby? Ooh, look at that. Natus Medical. I don't know anything about this stock. I guess you gotta like the. Oh, I know why. 88% increase in earnings on a 5% sales increase. Next quarter, negative 19 is what they're expecting. The stock trades 129,000 shares, so I'm not going to play it. But you know, maybe it's playable for somebody else who likes to buy little tiny stocks like that. RH, yeah, Restoration Hardware. You have a little bottom fishing pocket pivot coming up through this range here and off the 20-day line. Now you're coming up through the 50-day. I think it's getting some positive play from lumber liquidators, which was nice and tight along the 10 and 20-day moving averages and popped on a viable gap up to new highs yesterday on earnings. So, you know, it's a little marginal here. It stalls a little bit. But, again, you could have waited and then bought it knowing that where your low is right here at 111.76 and it closed at 113.99. So that's pretty reasonable risk, and you know exactly where you are with that stock. So, but RH is starting to look good too. So it's possible maybe it's getting some play from that. They're not exactly the same. I mean, they do sell certain elements. You know, LL focuses mostly on wood products and flooring, stuff like that, whereas RH, I think furnishings and other things like that as well. So, you know, not too bad, but trying to turn. HVT, what is that? Haverty Furniture, trying to come up and around, but no buy signals, mostly red volume, so no pocket pivots, nothing. So really not the one, probably the weakest of the group. So watching RH come around, but still, you know, RH has a lot of this heavy downside volume, and yeah, you're starting to turn. But you know, the leader in this area is Lumber Liquidators, obviously, but it's getting a little bit, you know, that's had a long run. So not necessarily clear to me that it's starting some great new price move right now, right here. EVR, Evergreen, is this what that is? No, EVR. Evercore Partners, another viable gap up. But again, you know, if you like it, 32% earnings growth, nothing spectacular, but it's not terrible. If you like the viable gap up, then your stop on this is 52. So yeah, it's pretty simple. TRN chart, you know, this one, I think I pointed out some pocket pivots coming around, and here's a situation where you definitely had one in here, and here's one. Was that? Let's see, 1, 2, 3, 4, 5. I think, yeah, that just barely clears it here, coming up through the 200-day moving average. Then another one here, and it's been moving higher. So you know, this is trying to come out of here, and it's been acting reasonably well. But it's, you know, you're not. A 33% increase today on volume on a breakout attempt doesn't look all that powerful to me. So, do you watch? Somebody asked me if I watch any other indicators other than the 620 for short-term trades. No, I just watch the stock trade. I mean, I got to tell you, I shorted F5 this morning, and that was my big score of the day on this big outside reversal. But I didn't really watch anything except the daily chart. You know, for my trading, I've gone back to just simpler ways. I don't watch as much on my screen anymore. I only have one monitor screen up with, you know, I'm going to say maybe 100 symbols, but you know, not that many. And just, you know, having to have indicators, all this stuff, it's just noise, and it seems to get in the way more than anything. And so I don't really pay attention to it. Or seek indicators. The 620 chart, of course, you know, is always useful. Let's see, I never really even looked at it this morning on F5 because the breakdown was here around 89, and you got your, you know, it's kind of a little bit, would have been late, so it's not, but definitely I know when to cover. So, and on the daily chart, because I'm using the lows here. So in essence, I'm really using the daily chart to handle the position, not the 620 chart. Although that comes in handy when things are rallying sharply and you're looking for a turn, say, in a stock. So like with Netflix, you know, here's the breakdown in the morning, but then here's where you could have come in and bought it if you're trying to go along a stock. Because my theory is they may try and rally it a little bit here as everybody on the planet tries to go short the stock, thinking that it's that outside reversal day is death and means the stock's headed lower automatically. I think you might wedge up higher, and so that's how I might use it. But to tell you the truth, try thinking. When I left O'Neill and started running hedge funds and these prime brokers, these institutional prime brokers, they got all kinds of gizmos they want to sell you and have you look at, and it just becomes noise. And I just find I can operate pretty much with my 620 chart and a daily chart, and that's really all. And using some judgment, some common sense. As I like to say in the chat room, a little common sense can go a long ways in the market. It's not really that complicated. So I think that's pretty much all we have for today. I think most stocks you're looking at, you got some viable gap ups. I would probably focus there. Buy some of the, if you see something that is coming out of a nice base, and I would say Google is actually coming out of a nice base. I think it's like an 18-week base. Let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 15. No, it's like about a 20-week base, 20 weeks, I think. 21-week base. And it's coming out of a new base on a viable gap up. I think that sort of stuff you can probably buy. So, not a problem. Going into earnings, though, you got something like Amazon, which has recently come out of this base here, and it might be a little extended, trying to break out of a funky-looking cup with handle thing here. I guess this would be a high handle, but you're going into earnings. But some of these newer situations I think are viable. It seems like stocks that have had big moves, there's more risk there, and so some of these, you've seen the Generac, the Nxpi on the BGU, the VFC was another one, and there was a few others people met. These might be places to deploy for new deployments, and that's a possibility, and that's where I would focus. I think a lot of these stocks, if you want to sit through corrections, they might be in a position to pull back. Just going through my list: Yelp, YY, Yandex, Kihu was another one. Here's it breaks out. You have a little trend line breakout. You can draw a line across the tops here, and it breaks out and pulls back to that line. I guess you could try and play some of these on the pullbacks, but I don't think going into earnings I want to own much, and I would be very careful. I think Ford was also trying to be a viable gap with this morning, but it's kind of flaking out. And that's pretty much it. A lot of these stocks are really flopping out. Somebody pointed out that the Finisar is breaking down because of INFN earnings, and that's another company. They're not really the same kind of players, but I think you're breaking the patterns here. And this is, to me, trouble. So for me, if I own these, I'd just get rid of them and let them set up again. It's not a big deal to me. Anyways, let's see. Just checking in. AFOP has really been a flop. It's come back in. NQ is another one, still coming back in here. I'm a little wary of this one. It's kind of thin. It might need to come in closer to the 50-day, so that's a possibility. Anyways, I think that's all I've got. You got any last-minute words of wisdom to offer?
I think we're good. I think we're good on this side.
All right. Sounds good, everybody. That's it. We'll catch you next week. In the meantime,
so long, everyone.
Happy trading.